Hey there, Tony Sycamore here. It is Sunday the 28th of February, bringing to you a video review of 5 key charts that matter for the week ahead. I want to start this week with the S&P 500 because what we saw last week appears to resemble a 3-wave corrective pullback. Now, within an Elliott wave framework, and we're going to be talking about this a bit over the next few charts that we're going to be looking at, a 3-wave pullback is viewed as a correction before the primary trend resumes, which in this case is higher. And we've seen a couple of instances in the S&P where there has been 3-wave corrective pullbacks, followed by new highs in the S&P 500. So this low down here on Thursday, coming around 38.43 and a quarter, I feel that completed a nice little 3-wave correction, and that we should see the S&P 500 push up towards the top of this trend channel into the middle of this week, which should be around this 4,000 area. Now, the only caveat about trading this week, of course, is that it is month end and quarter end, and we can see some very unusual flows. So keep that in mind. But for me, the base case is the S&P 500 pushes higher, at least by the end of this week. Potentially, we need to get through that end of month rebalancing. I have a bullish bias, providing the S&P doesn't break down below the bottom of this trend channel, coming in around 37.80, 37.70-ish. Looking at currencies, I find this Aussie dollar chart intriguing because once again, it is a 3-wave corrective pullback from the 80.07 high. And what has happened last week was the break below this 76.22 low appears to have been the 3rd wave, or wave C, of this ABC correction. Now, bearing in mind we had a 5-wave impulsive push higher from this 69.91 low back in November. So the primary trend is definitely up. This is viewed as corrective. And what we also know at the moment is that there's been a lot of position squaring up. The dollar short trade was a very popular trade at the start of this year, but this has seen a lot of, really since February, we've seen a lot of these dollar shorts be unwound, and positioning is now a lot cleaner, which I really think is worth keeping in mind. So for me, I think there is a good chance that we're very close to the end. The wave equality target for this wave C is in fact 74.70. The minimum requirement is in place, but at the end of the day, I think we're close to a low here in the Aussie dollar. Maybe just has one more look lower down towards 74.70, as I mentioned. But if the Aussie can push above these lows here, we had a number of lows over the past couple of weeks around 77 cents, 77.20. If those lows go, i.e. if the Aussie pushes above these 77-cent lows, I think that confirms that a corrective pullback is complete and the uptrend has resumed. A similar story for sterling. And what you can see here is the pullback from the 142.43 high has unfolded in 3 ways. Once again, it is a corrective sequence, which means that once the correction is complete, the uptrend, or the primary trend, should resume, which in this case is an uptrend, as you can see. What is also interesting to note here is sterling has reclaimed the broken uptrend. This uptrend comes all the way from this 114.11 low from March 2020. The sterling had a look below here last week, didn't like it, closed back above here. And while the ideal target is a little bit lower, the minimum requirement is in place. And if sterling was to push on up above 138.20-ish, 138.30-ish, I think that would confirm that this corrective sequence is complete. And I'd be looking for a push up towards 140.05, 140.20 area, which is these highs here. A break of this 140.20 area, and I think you can see a retest and break of this 142.43 high. Looking at dollar yen, different kettle of fish altogether. Now, dollar yen has done very well by the rally in US yields has taken dollar yen higher. And what you can see here is, it appears, I mean, this is clearly an impulsive push higher. And I think this is some sort of wave 1, wave 2, wave 3. We had this correction, this consolidation ahead of that 109.35 trendline resistance going back to 2015. It's been about 3 weeks consolidating here. But the break above 109.35, to me, opens up a move towards 111, above 111 in dollar yen. So I will be looking to buy corrective pullbacks in dollar yen in expectation of this wave 5 to extend up towards 111. Looking now at Bitcoin, this chart has also, we're keeping with the theme of 3-wave corrective pullbacks. I was thinking potentially that Bitcoin had started to put in place a wave 5 high. You can see the bearish divergence in place here, which meant that Bitcoin was making new highs, but the RSI wasn't confirming it whatsoever. However, in terms of this pullback, once again, it is three waves. It is, in theory, a correction. And I think that should Bitcoin hold this $50,000 support, then Bitcoin can push up towards maybe 68, 70,000 in the coming days. And this is something I think we have a nice tight stop loss here. It shouldn't trade below 50,000. And I'd be looking for a retest of 61,781, possibly, as we mentioned, up towards 50,000. Folks, I hope you've enjoyed this video and found it very useful. Please, if you like our videos, subscribe to our YouTube channel. Have a great week ahead. Cheers.